Hi, hello, and welcome again to another edition of Market Analysis for today, July 31st, 2023. I'm Giovanni Betancourt, analyst, trader, and educator with Vantage Markets. Well, it is Monday, it is the end of the month, and at last, the markets and the Federal Reserve appear to be agreeing on something, a soft landing for the US economy. So, as some people are talking about that the central bank can now steer the economy into a so-called soft landing that will entail bringing down inflation to the 2% target without causing a recession. So the Fed's preferred inflation metric Friday gave the stock market more reason to be upbeat as the core personal consumption expenditure index fell to an annual 4.1% in June. Now, it's been a jubilant July for the S&P 500. The index is up 3% for the month and 19 for the entire year so far. But, and it's a fairly big but, core PCE inflation is still more than double the target and more rate hikes could be ahead, which could puncture the buoyant mood. Now, the bond market appears to think so. Bond yields rose last week as strong economic data, including GDP, pointing toward more rate hikes. Yields and stock don't typically rise in tandem, but they seem to be focusing on two different things. The Fed's data-dependent approach means future rate hikes are up for interpretation. Friday's payrolls will be the next data set to help shape the central bank's September decision. The stock market, for now, isn't concerned by more rate hikes. A robust earnings season so far is helping to broaden the market rally, and investors are choosing to focus on the diminishing recession chances, I beg your pardon. At the midpoint, 80% of companies have beaten earnings estimates according to obviously some traders and analysts. Now, however, with the economic data galore and a third of the S&P 500 reporting this week, there's plenty in the coming days that could test the optimism. So, with that being said, let's take a look at how we can interpret all of this news about soft landing or recession, GDP, payrolls, and the PCE. So, that being said, we're looking at the NASDAQ daily chart. So on Friday we closed green. We basically uh, fluctuated basically the same as Thursday, but today we are continuing with that mood, and we are right there at the highs. So we could contemplate that a continuation to the upside can be favored. 16,000 will be obviously the psychological resistance point. I have my resistance at 19 at 16,063, which is the high of July 19th. So that could most likely be met. The RSI, however, is not obviously is not entering just yet the overbought territory. So long with the Nasdaq. S&P is a fairly more cautious asset to trade. So we're been hearing about 4,800 in the S&P between now and the end of the year, or anytime between now and the end of the year. But also some other people are always saying 4,000 for the S&P. So however it is, for now we are with the momentum to the upside, right? So we initially, I'm looking, my initial target will be 4,632, which is the high of July 27th, but the resistance will be at 4,650. So we are almost entering the overbought territory. So be careful with that one. Then we have here what is called the Dow Jones Industrial, and the Dow Jones is right entering the overbought territory. So 35,800 could be that initial psychological resistance level for the Dow. So careful with that one. I have mine at 36,000. So be long in the indices. Then we have crude oil, which is already in overbought territory. So a pullback, a correction can be contemplated. How much further down? $81 initially, or 80 and a half, right around where this candle opened today. So anything could happen, right? The market could just retrace, do a pullback all the way down to 80, and then find that support around here, and then make another attempt at 82, 82 and a half. But initially, since we are in the overbought territory, you contemplate a continuation of this rally to the upside inside the RSI to up to 75. That should bring the market towards the 82 and 50, $83. Then Nat Gas is just retracing today after making a nice rally to the upside. So I'm looking at 260 as being the support level for it internally. Then we have gold. Gold is has been fluctuating a lot this morning. It traded lower, now is back into the green. So 1970 is that initial set resistance level for it. Let's see if that could be met and beyond towards 1980. Then silver also 250. I'm looking at see if we can reach back $25 today. It could be RSI is further away. So then we have copper. Also, copper is just nicely, tagging along to the upside. Nice small gap up. It was close, so that continuation to momentum to the upside could be met. $4 is my target for it. It could be surpassed, but initially just $4. So the Bitcoin is just really ranging lateral movement. This could be just another position to do some sort of a breakout. This guy did right here, boom, 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 then just broke out to the downside. So let's see what happens. Then the currencies, the euro is looking to stay north of 110 and is doing so far pretty well. The pound also looking to stay north of 128 and is doing that so far. But the dollar index says, well, I'm here, I am balancing myself out. Let's see if I make another attempt to reaching 102. If that's the case, then we'll see a drop in the metals, currencies, and indices as well as crude oil. Have a fantastic trading day today, and I will see you tomorrow.